Let's talk about why I stopped chasing passive income. So, when I started investing 10 years ago, I thought that passive income was the key to financial freedom. Because when you talk about cash flow, if the cash flow can cover the expenses, then by definition, you are financially free, right? And this passive income source will come from like dividend stocks or REIT payouts or even rental from investment property if you have the chance to own one. And you see, right? So the cash flow is more than expenses and you never have to work again. So that was the dream or the key to where I first forayed into investing. And I guess that's what many people dream of, right? Like you can retire early and never work again. But the truth for my own situation is that chasing passive income too early has slowed down my growth and accumulation phase. And I'm very sure some of you will be faced with the same situation as I did. So in this video, let me explain why I stopped chasing passive income. When I first started investing and all in into this financial independent phase, I was obsessed with the idea of making money while you sleep, and that is passive income. I manage multiple high interest savings accounts, look for the best dividend stocks or even REITs distributions to boost my cash flow payout so that I can increase the monthly cash flow that is coming in every quarter or every half a year. At one point in time, I even maximized income strategies through money market funds through the promotions. Now, those returns felt really good and really safe because you can really comfort yourself that every month or every quarter there's money coming in and you feel secure about it, no doubt. And it's a very good confidence boost that you can tell people that you make 1,000 per month passively without you actively working on it. And it's a very good idea to sell it. But over time, I realized by focusing so much on the comfort, something's gotta give. And that is the cost of growth. And if you don't want to miss out on your personal growth, then join us at over 22,000 members in the Honey Money SG Telegram group right here. But let's first cover some myth of passive income because I think this passive income idea is being thrown around in social media and it's like forcing everyone to chase it. So the number one myth is that passive income equals to freedom. And I assure you, it is not because most passive income require a lot of work upfront and it's not entirely passive even when the systems are set up. For example, if you invest in dividend stocks, they will still need monitoring over time to ensure that they have the sufficient cash to pay out all these extra profits as dividends to shareholders. If you are investing in the REIT in the form of distribution payouts, you need to ensure that the REIT manager is really acting in the best form of interest for your shareholders and not dilute the shareholders through rights issues or private placements or even cut their distribution, which will hurt the stock price in the long run. Now, don't even get me started on rental income because it comes with its own set of headaches and problems and tenant management and maintenance and replacement costs that you may not even know that all these costs are upfront and very troublesome. Even money parked in safe places need review because banks and financial institutions always change their terms and conditions and promos are limited time only. Just like the recent UOB1 account, the interest rates is going to drop again from 1st of December. So you really have to monitor. It's not always there permanently. Now, the second myth about passive income is that the higher you percent, the higher the return. Because when I was younger, I chased dividend stocks that are at least giving 5 to 6% dividends, and that includes REITs as well. But you look at it, it doesn't matter how high the yield is if the total asset under management, the AUM, or the capital isn't growing because you want to look at a total return standpoint. What's the point of getting just 6% per annum payout in cash flow if the stock price stays stagnant? Rather, you will go for a total return of 10% or more. The 6% return in the form of cash flow is just for you to feel shook only. But in terms of total AUM, it really matters more if the total return is much higher than what the cash flow is paying you. And the final myth I want to discuss is that passive income is more important than active income because I also had the mindset when I was younger, right? When I was working in a corporate role, I always want to build my passive income so that one day I can leave my work. But you will realize that if you really focus and concentrate on your active income, it can use so much more returns than passive income, especially when you're young and your capital and your AUM is not that huge. Your biggest asset isn't your capital, but time, okay? The time to build skills, to build knowledge, to build networks, because you have the time to also compound your skills. And these skills, if they are high income skills, they can compound over time and even derive you more income. So the ability to earn and learn when you're young is often underrated, while the focus on passive income when you're young is often overrated. Now, if you don't understand, I give a few examples. If you focus on your career, your side hustle, or whatever business you're working on, which is considered active income more than passive income, I'm sure they can yield more returns over the long run, even if you fail at the start, because you can try on more things when you're younger. Passive income only becomes more important when you have a huge AUM, a huge capital, and at the later part of your life where you can deploy a higher amount into all these passive income generating assets. So before you reach the stage of retirement, I feel that you should really focus on active income, growing your skills, growing your knowledge, growing your network so that you can bring in more cash. I also want to cover deeply why I really focus so much on active income. Because you see, most people on the internet, they are trying to sell you the passive income dream, like trying to make $500 per month, whether from dividends or REIT payouts, right? It sounds very sexy and very attractive. Like you every month you just come in $500 per month, and then they will put their CDP statement or their bank statement receiving the dividends. Sounds very good. But don't forget that they also took a huge amount of time to set that up just to earn what, $500 per month. While the same time duration could have been taken to learn a new skill, to build a new network, to focus on your side hustle, such that it can bring you $10,000 to $20,000 additionally per year as a side hustle. Or if you focus it on growing your skills, growing your network, and aiming from next promotion, you could have even double or triple your income once all these high value skills takes its place. And this was exactly what I did with my content creation business with entrepreneurship. And because of what I did, I could invest larger amounts later, which compounds much faster than chasing the additional number in the form of yield and then get some form of monthly cash flow or quarterly cash flow from dividends, payouts, or interest. But I fully understand that it may be a huge leap of faith to change the mindset because you have been wired this way all your life. And while you are bringing in more money, earning more cash, you will also need a place for your idle cash to earn some returns. So to make it easier, I'm glad to share that USmart is offering a money market fund promotion from now till 31st of December, where you can earn 10% per annum for 30 days on up to 5,000 Singapore dollars. To be clear, it is only valid for new USmart users who are aged 18 and above and are residents of Singapore, or they are existing USmart users with no prior deposits. How to sign up for this promotion is very simple. First, you have to sign up for a USmart account using my exclusive link, deposit cash funds, and subscribe to a minimum of 2,000 Singapore dollars, maximum 5,000 Singapore dollars to the Maybank Money Market Fund on the USmart app, and hold it for 30 days to qualify. The reward will then be credited by the 10th business day of the following month. So don't miss this 10% per annum promo and sign up for a USmart account with my exclusive link today. And don't get me wrong, while this is still considered passive income in nature, it also involves some active work and execution around it because there are terms and conditions and requirements to fulfill. So I see this as a smart temporary boost, while you should still keep focused on growing the income engine. Now, after saying so much about passive income versus active income, I want you all to change this mindset into a total return mindset. And what do I mean by total returns? That is capital gains plus income plus any foreign currency gain or loss. For younger investors, especially in your 20s and 30s, time is on your side. So you really have to focus on building the biggest capital, building the biggest AUM, and that will not come from an income investing standpoint. Because I'm very sure you understand the theory and concept of compounding, and compounding works better when you have a bigger asset under management AUM. Okay, if you have a small AUM, even if you've had that few dividends or redistributions, it really doesn't change the AUM much. For retirees, or if you are even luckier, an early retiree through the FIRE movement, and you don't have a salary anymore, that's when you can start focus on income generating assets. Because now that you are no longer drawing a salary, it is very important to have stable cash flows to sustain your daily expenses. So there's really no one size fits all strategy. It really depends on your life stage and priorities, and most importantly, your risk comfort, because some of you may be uncomfortable in investing a large amount into higher risk positions, and I fully understand that. So if keeping part of your cash funds in a stable asset like a high interest savings account, a government bill, T-bill, bond helps you sleep better at night, then I think that is fine. But don't over allocate too much into it, or you will affect your total growth and total return. because I really understand that for some of you, peace of mind is very important. But you have to understand that peace of mind comes at a cost, and you have to weigh this cost, whether it's worth it for that peace of mind. So when you're younger, I'll focus on growth and learning within yourself, with your skills, with your knowledge, with your network, and whatever you can try on, because you can fail again and try again. But when you're older, that's when you need to have more stable base, because you cannot take much risk anymore. You have higher liabilities, you have more mouths to feed, and that's when you can focus on protection and income. So for myself, I don't chase small passive returns anymore. I really focus on the total return, building the AUM, building the capital, whether that's through business or side hustles or other new opportunities that I'm open to, that can increase my income sources and earning power. I think that's the most important when you're in your 20s and 30s, because active income builds the engine, while passive income is the switch that you turn on after the engine is strong and robust enough. So you need the strong engine first. But even though I say so much about earning power, growth, exponential, and AUM, I think it's always good to sometimes live a little and take a break and relax. And life is always not about the pursuit of money, just like you can win a 2-day 1-night staycation at the Equarius Ocean Suite with You Smart promotion. How to qualify and win is really simple. Just make at least one successful trade this month, maintain a minimum of 2,000 Singapore dollars AUM, and you can get entries for that month's draw, because every month they will have a monthly draw, and one lucky winner will get a 1-night stay at the Resorts World Sentosa Equarius Ocean Suites. So full details and TNCs are linked down below. If you forgot whatever I just said, I will give you a too long didn't read version. When you're young, build skills, grow active income, and focus on the total return. Once you're older and your AUM is larger, that's when you can focus on passive income, because the engine turned on, you can then let the tap flow through all your cash flow sources of passive income. And if you want me to share my unfiltered thoughts about the REITs and dividend stocks, I think I have some series coming up, so you can comment REIT plus one or dividend plus one, because I'll really share my perception of how I shifted or changed from a cash flow or income investor to a capital growth investor. So that will be a 2-part series, because I felt that it was a really good turning point, an important one for me, which was a significant change that really propelled me on my road to become a millionaire. But if you're still far away from that 1 million dream, please don't fret, because you can always start small. With just $5,000, I will share with you how you can invest small as a beginner with just $5,000 in this video right here.